Investing in emerging markets, it just has this exciting feel, doesn't it? The potential for huge growth.
Absolutely.
And when you talk e-commerce in Africa, well, the name Jumia pops up almost instantly. People call it the Amazon of Africa.
Yeah, it definitely paints that picture, doesn't it? A digital revolution on this massive continent.
Right.
But like any investment, especially somewhere with, well, unique complexities, you really have to dig a bit deeper than just the catchy name.
Exactly. And that's what we're doing today, this deep dive into Jumia Technologies AG, ticker JMIA. The goal here is simple. Look past the headlines and give you a clear, concise view of where Jumia actually is right now. What hurdles are they facing, and what are the real opportunities, if any?
Yeah, and to get that clear picture, we've pulled together info from different places. We've got a stock performance snapshot, a look at their financials, the numbers, basically what analysts are saying, and even some, chatter we've seen online, the general sentiment.
So we're essentially trying to do the heavy lifting for you. Filter through all that data and opinion to pull out the key stuff you need to know without getting bogged down in, super complex finance talk.
Right.
Okay, so let's start right at the beginning. What exactly is Jumia, in practical terms?
Okay, so think of Jumia as this big online shopping hub. It operates across loads of regions in Africa, West, East, North, South. They even have operations in Europe and the UAE.
Wow, okay.
They started back in 2012. Headquarters are actually in Berlin.
Uh-huh.
But it's more than just a website. They've really built out a whole system.
Meaning?
Well, they run the marketplace, connecting sellers and buyers. They've got their own logistics arm to handle deliveries, and that's a huge deal in many parts of Africa, right? The infrastructure challenge.
Definitely.
And they also have Jumia Pay. That's their payment platform, kind of tailored for the different ways people pay across the continent. And they sell a ton of stuff: electronics, fashion, beauty products, groceries, everyday items, plus digital things like paying bills or topping up your phone credit online.
So that Amazon of Africa comparison, it captures the breadth, at least.
It does, yeah. It captures the ambition to be that main online platform, for sure.
Okay, so we get what Jumia is. Now, how's the market seeing its potential right now? What's the stock performance telling us?
Well, the stock story over the last year really shows a lot of uncertainty in the market. So as of May 4th, 2025, the price is hovering around $2.44.
Okay.
But here's the thing. The 52-week range, it's been down to $1.60 and all the way up to $15.04.
Whoa, that's a massive swing.
It is. It really screams volatility. It shows the market is really struggling to put a firm value on Jumia.
That kind of range would give anyone whiplash.
Totally. Their market cap right now is about $257 million. And looking at this year's performance, well, it's a bit of a mixed bag.
How so?
It's down 69% from that $50 high point we mentioned. Yeah. But it's also up almost 24% over the past 12 months. So some recent upward movement maybe, but still way off that pick.
Okay. And what about that volatility you mentioned? Is there a number for that?
Yeah, the beta is 2.88. That confirms it's much more volatile than the overall market.
So if the market moves 1%, Jumia might move almost 3%, up or down.
Exactly. Bigger potential gains, but also, steeper potential losses. And we also see about 9.5% of the shares are being shorted right now.
Meaning people betting the price goes down.
Right. And the days to cover is around 3.1, so it takes short sellers about 3 days to buy back their borrowed shares. It suggests there's a noticeable group of investors who are pretty skeptical about the near term.
Okay, that paints a picture of a market with a lot of questions. What about the professionals, the analysts who cover Jumia? Are they just as divided?
It's interesting, actually. The average rating from the two analysts we looked at is a buy.
A buy, okay.
And their average 12-month price target is pretty optimistic, $7.88.
Wow, $7.88 compared to $2.44 now? That's huge upside. Yeah. Over 220%.
It is, yeah. Very bullish. The average brokerage recommendation also leans positive, but, and this is important, some other sources show a more, let's say, conservative average target around $3.88.
Right.
The range even going from $2.63 to $5.25. So yeah, the overall expert vibe is positive, but there's a big difference in how positive, how much gain they actually expect.
So the glass is half full for the analyst, but maybe some debate on just how full it could get. Okay, let's get into the nitty-gritty, the financials. How are the actual numbers looking?
Right, this is where it gets a bit more complex. So revenue for the full year 2024 was $167.49 million.
Okay.
But that was actually a decrease, just over 10% down compared to 2023. And Q4 showed a similar drop.
So sales are shrinking, not growing. That feels pretty important. What about profit or losses, I guess? Are they managing to cut those down?
They did, slightly. The net loss in 2024 was $99.09 million. That's a small improvement from the $104 million loss the year before. It's still nearly $100 million in the red. That's substantial.
Yeah.
And the profit margin, deeply negative, minus 53.64%.
Wow. So a huge gap between what comes in and what goes out.
Exactly. Now, here's an interesting twist, though. Their gross profit margin is actually really strong. 62.20%.
62%. So on the stuff they sell,
Yeah.
they make a good margin.
Yeah. It suggests people do want what they're selling, right? The challenge is the overall cost of running the whole show. That's reflected in the negative operating margin, which is minus 29.33%. And their adjusted EBITDA last quarter was also negative $13.7 million.
Okay, so they make decent money per sale, but running the warehouses, the deliveries, the tech,
Yeah.
all that eats up more than the profit they make on the goods themselves.
That seems to be the picture, yes.
What about cash? Do they have money in the bank to keep going while they figure this out?
That's actually one of the brighter spots. They've got a healthy cash balance, $164.58 million, and very little debt, only about $11 million. So that gives them a net cash position of $153 million, or roughly 1.25 per share. They don't seem to be facing like an immediate run out of money crisis.
That's reassuring.
Yeah.
But are they burning through that cash? What's the cash flow situation?
Yeah, that's the less reassuring part. Their operating cash flow was negative $40.78 million. Free cash flow, similar, negative $43.36 million.
So the day-to-day business is still using up cash.
Correct. Even with that cushion in the bank, the operations themselves are burning cash.
Okay, so financially, declining revenue,
Yep.
Big losses, though slightly better. Strong gross margin, but high operating costs. Good cash pile, but it's being depleted. A real mixed bag. What about the actual operations? Like, are people using the platform? What are the metrics saying?
We are seeing some encouraging signs there. So in the 2 months ending November 2024, the total number of orders went up 18% compared to the year before.
Oh, okay. That's positive.
Yeah, and specifically for physical goods, their main thing, orders grew 17% to 3.9 million. So it looks like they're still attracting customers and, people are buying stuff.
That's definitely good news. Are they expecting that growth to keep up?
Their forecast for 2025, looking at gross merchandise value, that's the total value of everything sold, they're guiding for $795 million to $830 million.
Right.
And they expect physical goods orders to grow another 15 to 20%. So yes, they're projecting continued growth in volume.
But, I sense a but.
Well, the crucial but is their expected loss before tax for 2025. It's still forecast to be pretty significant, somewhere between $65 million and $70 million.
So even with more people buying more things,
Mm.
they still expect to lose a lot of money.
That's the projection, yeah. It shows that path to profitability is still proving challenging, even with rising volumes.
Which brings us to strategy. What are they actually doing to try and bridge that gap to get profitable?
Well, they've definitely been focused on operational efficiency, things like consolidating warehouses in places like Egypt and Ivory Coast.
Makes sense.
And they've also exited some markets they decided weren't strategic, presumably to cut down on costs and complexity. They also made a big deal about their Black Friday event in 2024 being a success, driving a lot of orders.
Okay, streamlining operations. What else?
They're also pushing Jumia Pay quite hard, making partnerships, trying to offer more payment options, even things like installment plans. The idea is to get more people using the platform more often, build some loyalty.
Right, making it easier to buy.
And importantly, back in August 2024, they did a big share offering, raised almost $100 million in cash.
Ah, yes, I remember that. Didn't the stock price react badly?
It did, yeah. It was kind of a double-edged sword. Great for their cash balance, obviously.
Sure.
But the market really didn't like the dilution.
Yeah.
More shares outstanding means each existing share is worth less, theoretically. The stock dropped like 53.8% after they announced earnings and that offering.
Wow, that's drastic.
It really shows that balancing act, right? Needing cash versus keeping shareholders happy. Interestingly, though, we did see Vanguard International Growth Fund take a noticeable stake around then, so some big institutions still see long-term value, perhaps.
Okay, so cost cuts, expanding payments, raising capital, logical steps, but maybe a hesitant market reaction.
Yeah.
Let's be blunt. What are the biggest headwinds here? The main challenges and risks for Jumia?
Number one, absolutely, is the lack of profitability. $2 billion in losses since they started. That's a huge number. It raises fundamental questions about whether the current model can actually work long term.
Right.
Then there's the operating environment. African markets can have really volatile currencies, big macroeconomic swings that affects consumer spending and Jumia's own financials directly.
And competition. They can't be the only ones trying to crack African e-commerce.
Not at all. Fierce competition.
Right.
From regional players, we saw some negative comments online comparing them unfavorably to, like, Naivas, which is apparently profitable. And also, the global giants are definitely eyeing Africa. Plus, those cost-cutting measures we talked about. They're necessary, maybe, but there's always a risk they could hurt service quality, right? And push customers away.
You cut too deep.
Exactly. And finally, as we saw with the stock price swings and the high beta, just the sheer volatility, that uncertainty itself is a major risk for investors.
Okay, so economic pressures, tough competition, the profitability puzzle, and the risks of cost cutting. It's a complex picture. But surely it's not all doom and gloom. What are the real opportunities here?
No, definitely not all doom and gloom. The long-term potential of the African market is still, immense. You've got internet access growing rapidly, a huge young population getting more comfortable shopping online.
The demographic argument.
Right. And Jumia was early in many of these markets. That first mover advantage is real. Plus, they've built that logistics network. That's a significant asset, given the challenges on the ground.
Something competitors would have to replicate.
Precisely. And the analysts' optimism, it's largely based on hope that these strategic moves will work, especially if things get better economically in key countries like Nigeria and Egypt. And Jumia themselves, they seem to think they can handle much higher volumes in 2025 with their current setup. That points towards trying to achieve scale.
Right. Leveraging their existing infrastructure to handle more sales without costs ballooning proportionally. That seems key. Okay, you mentioned looking at online discussions like on X. What's the vibe there? What are people saying?
It's really polarized, actually, which maybe isn't surprising given everything else.
Okay.
On the plus side, you see people pointing to that institutional investment, like Vanguard, talking about Jumia as a long-term play on Africa's growth. Some technical analysis posts suggesting the stock chart looks bullish, potential for big gains.
So the believers are still out there.
Yeah.
And the crowd.
Well, they hammer on the losses, obviously. Those unfavorable comparisons to profitable regional players come up a lot. And just fundamental questions about whether this business model can be sustainable in Africa. A lot of skepticism about if they'll ever actually make consistent profit.
So that split online really mirrors the split we see everywhere else, the financials, the analyst views. Okay, ultimately, this all kind of boils down to valuation, right? What's the company actually worth? How do you even value Jumia right now?
Yeah, it's tricky. Based on their 2024 revenue of, $167 million, and the market cap around $257 million, the price-to-sales ratio seems relatively low.
Right.
But because they're losing money, the standard price-to-earnings ratio, PE, you just can't use it. It's not applicable.
Right, no earnings.
And with return on equity being massively negative, over 100% negative, the price-to-book ratio is probably really high, meaning the market values the company much higher than the accounting value of its assets, which aren't generating positive returns anyway.
So the usual yardsticks are kind of broken here. And I remember seeing something about a really stark difference in opinion on fair value.
Yes. This is crucial. We saw a note from Morningstar saying that by their calculation, Jumia is trading at a, get this, 593% premium to what they think its fair value is.
593%. So massively overvalued according to that.
According to their model, yes.
Yeah.
Which is just completely opposite to those analysts with buy ratings who think it's significantly undervalued because of the future growth potential.
Wow. That huge gap just perfectly highlights the uncertainty, doesn't it? It's incredibly speculative.
It really does. It shows just how differently people are weighing the potential versus the current reality.
So let's try and wrap this up. If you had to summarize the investment case for Jumia Technologies, what's the bottom line?
In essence, I think you have to see Jumia as a high-risk, high-reward bet. Simple as that.
Okay.
You've got these positive signs like order growth, customer engagement seems to be there. That's definitely encouraging. But you weigh that against these really significant ongoing hurdles. Actually achieving profitability, dealing with that tough competitive market, managing the cash burn.
Yeah.
And the stock's volatility just screams that uncertainty loud and clear. So potential investors really need to weigh that long-term dream of African e-commerce dominance against the very real, very present financial and operational risks Jumia is still facing today.
So We've dug into Jumia Technologies, the
Mm.
stock, the financials, the operations, strategy, challenges, opportunities, what people are saying online, and that really confusing valuation picture.
We've covered the ambition, the roadblocks, and definitely the conflicting views on where it might be heading.
Right. And that leads to a final thought for you, the listener, to
Mm.
chew on. With such wildly different takes from analysts and this huge gap in what different people think Jumia is actually worth, what single factor do you believe will be the absolute decider? What will determine if Jumia becomes the Amazon of Africa or, just another story of unfulfilled potential? Or maybe think about it this way. We see impressive growth in orders, right? But these persistent losses. At what point does potential just have to turn into actual sustainable profit for a company like Jumia to really make it?
It's a tough one. Lots of moving parts.
Indeed. Something to think about. We hope this deep dive gave you some useful context. Thanks for joining us.